My name is Joe Corio. I'm Senior Vice President here at URL Insurance Group, and I want to thank everyone for taking the time out of their schedule to be with us today. For those of you who do business with URL, we thank you for your continued business and your support. We know that you have a lot of choices as to where you place your business, and we really appreciate you working with URL Insurance Group. For those of you who are new to URL, we welcome you. URL is a full-service broker offering a complete line of annuities, and under the annuity umbrella we do fixed annuities, we do indexed annuities, we do immediate annuities, and we do single premium life. We also have departments that handle traditional life products, individual and group health, a senior division for Med Sup and Med Advantage, and we also have a group division. So I invite everyone to please check us out on our cutting-edge website. The address is www.urlinsurancegroup.com. So we have a great program for you this morning, and we're focusing on single premium life with living benefits. You know, single premium life has been a product that is really becoming popular over the last couple of years. A lot of life agents use it, a lot of annuity agents use it. It's a great product to have in your arsenal if you are selling annuities. Some people just have enough annuities and maybe they don't need any more income generating products. So the single premium life is a great way to go. There's also a lot of people out there with money in CDs and money markets just being sitting there waiting to be passed to the next generation, and single premium life does an awesome job of wealth transfer, which we'll go through today. The product itself provides solutions to clients' real needs, such as, like I said, efficient wealth transfer, accessibility of funds, and it also provides solutions for unexpected medical costs all seniors are worried about. Today we're very happy to have with us one of URL's primary partners over the last 15 years or so, EquiTrust Life. EquiTrust is and has been one of our top annuity companies, providing a full line of fixed and fixed indexed annuities, but they also feature one of the best income riders in the industry. So if you haven't looked at their annuities and their income rider, please feel free to contact us about that. In addition, though, EquiTrust has what I consider one of the best single premium life plans in the market today. Between the benefits that the product provides to the client, the compensation that is paid to the agent, and the ease of underwriting and doing business with EquiTrust, it's very hard to top what they offer. And I am very happy today to have with us Matt Stiles. Matt is a senior sales consultant with EquiTrust Life, and he's going to review the EquiTrust Single Premium Life plans for us so that you can see exactly how good these products really are. At the end of the program, we will answer any questions that attendees have, and you can simply type in a question if you have it. You should have a window pane, and at the bottom there's a question box. Just click that on, type in your question, we'll be glad to answer it. At the end, we'll also have our toll-free number, so if you'd like to ask us any questions, you can call our toll-free number. Again, my name is Joe Corio, and I'll talk to you at the end of the broadcast, but right now I would like to change and give the screen over to Matt Stiles from EquiTrust Life.
Thanks a lot, Joe. All right, thanks, Joe. Yeah, URL has been a great partner with us. My name is Matt Stiles. I've been here at EquiTrust for 8 years, and since day one, I've enjoyed working with URL. They're a great company, and I'm very excited today to be able to talk about our single premium life products. The WealthMax is what I'm going to spend the majority of my time just kind of talking about, but I'm also going to hopefully incorporate some ideas for you guys as agents, what you can be looking for, what type of business we're seeing come into this product. We rolled this out, it's been about 6 years now, close to 6 years. We've increased sales on the WealthMax each year up through, so it's a growing industry, the single premium life, And as Joe mentioned, we got a lot of annuity agents out there looking at it now too, because really you're kind of doing your client an injustice if they're not needing this money to live off of for retirement, everyday retirement living. The WealthMax can offer them so much more with our chronic care, nursing care, terminal illness, and then just the tax-free death benefit too. So I'm going to touch base on that, and then just a brief minute at the end to talk about our WealthPay. It's our newest product on the single premium life side. But first off, oftentimes, why would I buy a single premium life product? Well, it's an effective means of wealth transfer. As Joe stated, just a great and easy way for a client to create a legacy for their kids, for their beneficiaries, whoever they want to pass it on to. This example here, we're looking at just a 60-year-old female. She invests $50,000. She's instantly right away turning that into $103,000 tax-free death benefit. Kids, grandkids, a charity, whatever, they're getting that tax-free death benefit if she passes. So it's an effective means of wealth transfer. But then also we're seeing a lot of clients and agents out there looking at it for the chronic illness, the nursing care, chronic care rider that we offer on it too. Sometimes you go out and look at a long-term care policy. Those can be terribly expensive and something they're not going to, use it or lose it with a lot of those. So agents aren't really excited to be purchasing long-term care. This isn't a substitute for that, but it can be a great alternative for a client. That same 60-year-old female, you're turning that $50,000 into $103,000 for living certain health conditions on a living benefit rider, and I'll touch base a little bit more on how that works. So that's kind of why you'd want to just simply sell a single premium life product. But then oftentimes I run into agents on a weekly basis that say, especially those annuity agents, I got this client, they got money sitting down in the bank CD, they like having the safety of it there, and honestly, they just don't want to go through the fully underwritten product also. You find out 5 weeks later because of some issue, 8 years ago that were declined, you got to start over. The agent's got to go back up to the drawing board and start over with that client. So that's never fun. What we've developed is our simplified underwriting process. Basically, if a client is table 4 or better, they're likely going to get approved with our product. There's no rating scale. It's just approved or rejected, tobacco or non-tobacco. And how that works, we give a little chart on the agent guide. It's just kind of an outline that says, here's some things that might cause an issue that the underwriter is going to look at. Heart conditions, certain types of cancer or whatever. Obviously, we're going to look at all that. But then there's about 12 health questions on the application. Pretty straightforward. One thing I would like to point out, if they answer a yes to those, it doesn't necessarily mean it's a decline. Some of our competition, those are like knockout questions. If these are a yes, it's not going to be approved. With us, we're likely just going to need some more information. There's a chance that they still could get approved depending on, the answers on those. And then there is a phone interview. Last time I checked last week, the phone interview is lasting about 16 minutes. So not terribly painful for the agent and client. It just basically is repeating a lot of the same questions that are on the app, and then they break it down, if there's any yeses. They also do pull a prescription report at the beginning of the call. They ask permission to that. That helps the person doing the phone interview kind of know what to look for. So that is done then. They don't provide an answer, approved or declined on the phone interview. That all comes into the underwriter, and then a decision is made. But then a big one, there's no paramed. So that's the biggest difference from a fully underwritten product is the no paramed, no exams, no fluid draws. APS at underwriter discretion. If the case is $300,000 or more single premium, we'll go get an APS. So just so you're aware of that. But any other case, right now, I looked, again, like I said last week, we're only ordering an APS on 12% of the policies. And some of those are the over 300,000. So just an idea that we're only getting them if we absolutely need. If the underwriter says, we might be able to accept this, but I need more information. So then we'll go out and get an APS then in that situation. But usually, if we don't have to get the APS, a decision is made. I'm seeing right now it's about 24 hours. The agent gets an email, the URL will get an email. It says, hey, your client's approved. Oftentimes agents, if they do pick up a check and they just want to make sure it gets approved, hey, the next day, hey, we're good to go. You tell your client, we're going to send that check in and fund this app now. So pretty easy process that we've created with the underwriting. And you get real-time notifications via email and on the website. It's a big one. You can go out as an agent and view up-to-date notes of what our processors have put in the file there, exactly what's going on your case under the pending business tab. We've gotten a lot of compliments on that from agents. So that's kind of how it works. We've gotten, like I say, compliments on our underwriting process. I think it's still pretty smooth. We did just, I want to mention before I go on here, we did just have a thing where we do an express doctor's report now. So that just rolled out last week, where if there's just one specific condition that the underwriter wants and not have to go get a full APS, we'll send this express doctor's report, and I haven't really seen how that works yet, but it's supposed to really speed up the process, where they're not asking for a full APS from the physician. It's only just, hey, can you comment on this particular item, this particular health issue for this client? And that's supposed to speed up the process too, so I think agents will like that. Haven't had a chance to add that to my slides yet, but I thought I would mention it. In today's age, liquidity is a big thing. Clients want to know where their money's at, how they can access their money. On this particular product, on the WealthMax, we offer a 5% penalty-free withdrawal. Not really designed, like I say, for everyday income off of it, but it's something's there if they need it. You know, hey, we want to take a little trip, let's take 5% out of that. It obviously just reduces the death benefit proportionally. The big one, though, is our return of premium. It's just a nice feature when you're the agent sitting down with that client that's just a little skeptical, that says, you know, geez, I have that $40,000 down in the bank. I have no need for it. Probably will never touch it. It's just a nice peace of mind to know I can go down there and get it if I do. Well, the return of premium, what that does for your client, if they have to surrender their life contract with us, they'll get no less than their premium back. It basically means if they put money in, you know, there's a fee, there's cost of insurance coming out. Let's say it doesn't earn anything on the index side. You know, their account value could go down, but their surrender value is never going below their initial premium. They give us that $40,000, they have to cash it in 6 months later, a year later, 2 years later, you know, 3, 4, anytime. They'll get at least the $40,000 back. So it's just a really nice peace of mind to have for your client. I know it's difficult when you're sitting in that living room of your client and they're just a little skeptical about tying that money up. And then obviously the accelerated death benefit rider is a big one. If they need money, you know, concerned about certain health things that might come up through their lifetime, they can access the money that way too. This next piece shows you kind of what that living benefit rider offers your client. Your client becomes terminally ill. Basically, we get written notice from a physician that the client's expected 12 months to be around 12 months or less, and they say, hey, I want to personally give this to my, you know, grandkids. I want to have this money before I pass to do with what I please. They get 95% of the death benefit in a lump sum from us and close that out. So that's there for them if they need it. Nursing care is obviously a big one. If they're confined to a skilled nursing care facility, we'd have to get written notice that it's expected to be a permanent stay in that nursing care facility. They can access the full death benefit paid out over 36 months. So we'll take their death benefit, divide it by the 36 months, they can start receiving monthly payments. That's not, they don't have to turn in the bills from the nursing home, it's not paid to the nursing home, it's paid to the client. So they could already have a long-term care policy in place, they can still trigger that and get the checks from EquiTrust on that. An often question I get is the taxability on that, if it's taxable. If they're under the per diem, you know, I'm not real familiar with how that works, but generally, since they're accelerating the death benefit, generally that's tax-free, you know, when they're filing their taxes for nursing care pay there. Chronic care is also a great feature that we have. Maybe they're in their home still, a family member's coming in, you know, daily to help take care of them. The doctor says they're unable to perform 2 of the 6 daily activities of living. They can trigger the chronic care. And that full death benefit is paid out over 5 years, so we take it divided by 60 months. That also has a lump sum if they want to just cash it out at that point. They would get 75% of the death benefit in a lump sum. But really great living benefit rider that's on our single premium life products. That's available for the client. Straightforward, easy to understand too. Just some standard features on the WealthMax so you're a little more familiar with the product. It issues 50 to 85. We don't backdate in any way, so we have to have the app here by the time before they turn 86. So if the app's here, all the paperwork's signed, and maybe it's a transfer, you know, we could wait for the funds, but we'd have to have the transfer form or whatever. But anyway, if the underwriting takes, you know, we have to go get an APS and later it does get approved and they have their 86th birthday, we're still okay. The important thing is to get the app here before they turn 86. And then obviously 50, they can't be 49. You got to wait till they hit that age 50 to submit an app. Pretty straightforward there. Minimum's 10,000 on a single premium. Max is 750 face, so that depends on their age, how much we'll take. But right now we're at that 750 face for a guaranteed death benefit. This product obviously has a guaranteed death benefit all the way to age 121. So as long as they don't obviously cash it in or over loan it, you know, take loans on it and let those eat up the cash value, there's always going to be a death benefit on this for your client. There is a 10-year surrender schedule. It starts at 10% and decreases, so they would see their cash value, you know, increase as that surrender schedule goes down. It works like an indexed annuity. I mean, it looks a lot like an indexed annuity on their annual statements as far as the gains. We got some great cap rates that I'll show you here in a minute. Here's a big one, 12% premium bonus credited right away. That'll help because it's life insurance. There's going to be costs. We have a policy expense charge based on the amount of premium, and then there's also the cost of insurance coming out. So that 12% bonus bumps their account value up right away. They're also going to see an increase in the death benefit right away because the account value is higher, and that shows on the illustration also. That 12% helps offset anything too if they're coming out of something that maybe had a penalty on it. And then as I mentioned, it has that return of premium guarantee there, automatically built in at no cost. Here are those current cap rates. I get annuity producers that just are like, wow, 9% cap. But yeah, keep in mind that it's great. We've been able to price these real well. We've seen some great returns. But there are some, you know, obviously some fees in that associated with life insurance. So that's why another reason why we're able to offer, you know, such competitive caps. But we've seen some, like I said, over the first several years of this product, we've seen some great returns. On that monthly cap, seen some double-digit returns when that hits for the client. The 2-year is uncapped. It basically takes a 24-month average of the S&P, compares it to the starting S&P, and again, we've seen some great returns, averaging almost double-digit returns. I saw from 13 to 15 on that on a couple client statements that I looked at recently. Here's what we're illustrating them at. Point to point is at 5.5. That 2-year basically comes out to like 5.25 a year. But you can see just, you know, that's a look back. The actuaries do like a 25-year look back, but that's what we're illustrating the product at. Here's just a piece that kind of, hey, if you take nothing else from this, what does the WealthMax offer? Guaranteed death benefit, immediately creating that legacy for your beneficiaries for the client with that guaranteed death benefit right away. Those living benefits, chronic care, nursing care, terminal illness, and then obviously that return of premium, that peace of mind for the client also is what your WealthMax can offer your clients. I'm going to give you a couple scenarios real quick here just on the WealthMax. We got Betty, 2 grandchildren. She wants to leave the money to her 2 grandchildren when she dies. That's basically what she's looking to do with this money down at a bank CD. She does have concern, you know, what if something comes up, medical costs, nursing care, obviously. What we're going to show here, hey, she could leave the money there, earning 2% down at the bank, put it into an annuity, getting 3, or purchase the WealthMax. So just strictly looking at the death benefit, what's this going to provide her? Right away, that $50,000 is obviously going to be $50,000 if she passes away. On the annuity and the CD, the 2% on the CD is going to grow. It shows here over the 20 years. And then on the annuity, at 3%, it's going to do a little bit better. So after 20 years, at age 80, she passes away on that annuity. She's got $79,020 going to her beneficiary, but also $29,000 of that is likely going to be gains and going to be taxable if she put in $50,000. Oops, I'm sorry. And then the WealthMax, her death benefit at $50,000 right away is buying the 103, tax-free. 10 years later, it's going to at least be the 103. 20 years later, still got the 103. But then we're going to show it at a 5% illustrated rate here. and that's not uncommon for what we've seen the first 6 years of this policy. Her death benefit after 20 years, that $50,000, it's passing $131,839 on to her beneficiaries tax-free on her purchase. She passes away at age 80. She's passing that on tax-free to her kids. That CD at 2%, I think we calculated it's going to take 43 years to grow to that 131. So that same CD, she'd have to be 103 to have that tax or that death benefit passed on. It's just kind of a nice piece to show what it can do to some compared to other investments. And then obviously, what if she needs that for nursing care, chronic care? This is the minimum amount that she would get off that $50,000. She becomes terminally ill. EquiTrust is sending her a check for $98,075. For nursing care, she could take that as a lump sum and get an $87,000 check, or she can take that monthly, which we see most clients do. We're going to send her $2,868 for 36 months. That comes out to the $103,500. And then if she becomes chronically ill, we'll pay her 5 years at $1,720 a month for 5 years. Keep in mind, again, that is the minimum. So if we've had some good index credits, that account value's grown, those payments are going to be a lot more. And we'll show this on the illustration. There's a page there that shows the chronic care, the nursing care and chronic care payout also. Just a couple more things on the WealthMax. We have a great Showbook that's available. If you're an agent going out to show this product or even thinking about showing this product, put this in your briefcase, because a client might have a question that's hard to explain in words. This is a great piece. It's about 16 pages, but it's big print. It's easy to read. URL can get you these. We'll be happy to get you these. Just a nice little piece to have. We have it in a PDF. We have it in a PowerPoint. And then we also have it in a hard spiral-bound book that just kind of covers the product positioning, gives you examples, similar to some of these slides I've shown you today. It's just a nice piece to have. That's the WealthMax. I'm just going to briefly touch base on the WealthPay. It's a product we rolled out, what has been about 1.5 years now. But we had agents selling the WealthMax, very successful selling it, but then they'd say, yeah, but that client had a 401k, they had an IRA, that, you know, whatever qualified money, I couldn't touch it because of the tax consequences, moving that into a single premium life product. So I had to leave that there, even though they don't need the money. Maybe it's a client that, hey, I got to start taking these RMDs now. I don't need these. I have my retirement, my pension, my Social Security. I don't even need these RMDs. It's a great way to satisfy the RMDs and not have to take receipt of that. And I'll explain how that works here. We created this WealthPay, which combines a single premium immediate annuity with a fixed premium index link whole life product. Basically what we've done here at EquiTrust is you transfer us money here or send us money here, usually qualified money, because that's the purpose of the product, and we're going to spread out the tax consequences over 3, 5, or 10 years and use those payments to fund a life product internally here. So the taxable portion of those SPIA payments are spread out instead of all up front. And then obviously you're getting the tax-free death benefit right away. That's the biggest feature. You're taking that taxable money that would be taxable to the client or the beneficiary if they were to take receipt of it. We're moving that into a tax-free death benefit. And then this is a big one too. If the event that they die, they do a 10-pay and they pass away 5 years in, you're getting the death benefit paid to the beneficiary. The beneficiary is also getting the SPIA. They can even continue the payments if they want, or they could take a lump sum of the remaining SPIA payments. So like some of our competition, that money's not lost. They're getting not only the death benefit tax-free, but then the remaining SPIA payments, which would be taxable, but that money is still paid out to them. Standard features on that, 60 to 80. We did the 60 to avoid the under 59.5 on the penalties from the IRS. Same surrender schedule. Underwriting is the same, just as a heads up. So they look at the underwriting the same as I mentioned at the beginning. There's one app, and it's funded by the immediate annuity. They can do 3, 5, or 10-pay options to spread out the tax consequences. And then there's also the index accounts available, just like the WealthMax. And then, as I mentioned, the one app, the same underwriting process. So here's just a quick slide to kind of show why would I buy this. You got that same 60-year-old female. She's got that $50,000 in the 401k. I can't afford to pay taxes on that all in 1 year. I don't need this money. I'm not going to need it to retire off of. I want to move this to a tax-free death benefit to my kids. What's it going to cost me? Well, I do a 5-pay. $10,660 is the 1099 she's going to get each year. So a little bit more manageable at tax time. We're going to move those monies into the WealthPay Life product, and that's going to provide her a death benefit of $95,261. So as you see, if it's non-qualified money, you're probably just going to want to use the WealthMax because the death benefit's better and you get the bonus. But if you don't want to take that tax hit, look at the WealthPay. You're getting a lot of the same benefits and you're spreading those tax consequences out. It is a little bit of a niche product, but we find a lot of agents are needing that to show their client. Here's the current cap rates, similar to the WealthMax. You'll see instead of a 2-year, we have a 1 year with uncapped with 100% participation. So right now, whatever that 12-month average of the S&P does, they're getting all of the gains. Again, we've seen some great returns on that. Illustrating a little bit higher, just because the cap rates, a couple of them are a little higher, but about the same as the WealthMax product as far as our illustrated rates. And the illustration software, URL, can get you an illustration on either one of these products. We'll be happy to do it here on the sales desk also. Those are our top 2 life products. We've had great success with them. Just want to wrap it up here with, hey, what kind of money should we be looking for? What are we seeing here at EquiTrust? You know, if I knew a magic formula out there for agents, I'd be out selling it too. I know it's not an easy job, but what you can do is go back maybe through some of your clients that missed out on the annuity sale because they didn't need the income. Look at some of these life products. Bank CDs is a big one. I think 48% last time we looked, money coming from bank CDs when we asked for the source of funds. That lazy money, money market, or maybe they're in some sort of money market and it's not doing well. They got money just sitting in a savings account. Hey, leave some in the savings account. You got 50,000 there. Leave 30 in there. Put 20 in the WealthMax. It can do so much more for them, and they still have access to that money. Annuities, maybe they're underperforming. You got that rate. Cap rates are down around 2-3% on annuities. If they're not needing lifetime income off of it, move it into the WealthMax. You know, you might have to pay gains on the taxes on the gains, I should say, but something definitely to look at. Life insurance policies. You got something, maybe the premiums have gone up or they don't want to continue to pay premiums on this. It's not fulfilling whatever needs they initially bought the life policy for. 1035 it into the WealthMax, quit paying premiums on it, and you still have the death benefit. So that's also an option there. And then now with the WealthPay, you can even look at qualified accounts. So just kind of a summary there of what we're seeing, what the agent can be looking for when they're looking to write these products with us. Wrap it up today. I want to just focus on that email at the bottom. Both URL and agents, if you got an underwriting question, give us a call and we can kind of maybe shoot it by an underwriter. You know, the app and the phone interview is a fairly painless process, but if there's something that we're going to decline it anyway, shoot us an email at that lifesales.support@equitrust.com. I'll get it over to an underwriter. Usually within an hour they'll say, oh yeah, we can consider this. You know, this shouldn't be an issue. Or, hey, that's going to be a decline. You know, look at a different product because they're not going to be approved. So just something you can use. Any sort of pre-sale questions, we do a great job of handling that for you. So I'll wrap it up today. I want to thank Joe and URL again for having me. Hopefully you guys picked up a few things on our life products, and if you got any questions, URL is there to help. We'll be happy to help you too.
Thank you, Matt. Great job as always. We do have one question here on the WealthPay plan that we use for qualified annuities. How do you determine whether the SPL should be a 3, 5, or 10-year option?
That's a great question. What you want to do is probably, first of all, maybe get an illustration on each, but the 3-pay obviously is going to fund the life product faster, so you're going to have a better death benefit. But the trade-off for that is, let's say they're moving $30,000 over. The 3-pay, they're going to get about a $10,000 taxable. It's going to be taxable to the client. It's going to be a larger amount than if you spread it out over 10 years. So what you want to do with your client is look at, hey, how much can we afford each year at tax time? How much do you want this to be taxable? And then kind of work it from there is what I recommend to agents, because you're getting the benefits of the life product if you fund it faster. They become chronically ill 3, 5, 6 years down the road. Hopefully you fully funded that life product so you have full benefits there. But the trade-off is more tax to the client, if that helps.
Yeah, exactly.
Mm-hmm.
Right on. All right. Thanks again, Matt. And for those of you agents that are in the Harrisburg area, we are conducting a hands-on workshop right here at our Harrisburg office. It'll be on September 7th from 9 to 11. So look for that announcement. It'll be coming out shortly. And hope to have, we're going to get into these products a little more in depth and give you some sales ideas as well. So that'll be September 7th. 9 a.m. to 11 a.m. So you'll be getting an announcement on that. Again, thank you everyone for being on today. If you have any questions, please contact us. Our 800 number is there. My extension is 111, or you can talk to Maria Adams at 102. And the gentleman who heads up most of the single premium life is Jason Collins at extension 156. We gave Jason a couple of days off this week, so he'll be back in the office on Monday. Thank you, everyone. Thank you, Matt. Have a great day. Happy selling.